But you have to think about what will happen to your beneficiaries once they get that money. There's going to be a huge tax bill if it's not set up right. Hey, welcome to the Guaranteed Retirement Guy Show, your annuity guy nationwide, and here to talk to you today about annuities and estate planning, passing wealth to future generations, maybe to your kids, maybe other family members, maybe even charities. So I'm not an estate planner, but I do help people set these up, and I do work with estate planning attorneys to do that. So let's dive into it. I'm going to try to keep this super short because there's a lot to talk about. Basically, what you're looking at as far as leaving money from your annuity to beneficiaries is you're building up your asset. Okay, if it's a growth annuity, you're growing it. If it's a fixed annuity, a MIGA annuity, you have this guaranteed rate that's coming in. Both of these, you can leave whatever funds are left in them and earnings to beneficiaries. And if you want to avoid probate, then you need to designate a beneficiary. Otherwise, probate is just not fun to go through. Okay, so if it's an IRA, maybe your annuity is sitting inside of an IRA, then your IRA needs to have a beneficiary, and then it'll just pass to them immediately upon your death. Okay, if you're taking income from an annuity and you have a beneficiary, then whatever is left in that annuity will pass on to whoever that beneficiary is. Let me just kind of look at a few other things. So tax considerations. Annuities do have advantages, whether it's a qualified account or a non-qualified account. The fact is the money sitting in that annuity will grow tax deferred. Okay, that is just how they work. It doesn't even matter if it's a non-qualified account. It still grows tax deferred, which is pretty awesome. If you don't have an IRA and you're worried about that, rest assured your money will grow tax deferred. But you have to think about what will happen to your beneficiaries once they get that money. There's going to be a huge tax bill if it's not set up right. Okay, so you're gonna have to think about maybe setting it up in a trust. There are ways to do it where maybe that tax can be spread out a little bit more, maybe possibly avoided, at least initially. You will have to pay taxes at some point. So that's something to think about. And when you're setting up these annuities, you have to think about what's going to happen when they pass on to your beneficiaries, okay, as far as what taxes they're going to have to pay. So lifetime income for beneficiaries. Believe it or not, there are some annuities out there that will give you income, and when you die, give your beneficiaries income as well. If that's something that you're interested in, we can chat about that. Typically, the annuities that I set up are usually for an individual and their spouse. If you're an individual, then it's just easy. It's just income to you, and it's typically a little bit higher. And then after that, the money goes to whoever you specify. Now, if you've had this annuity for 30 years and you've taken out income, maybe you've had a $300,000 annuity, you let it grow for a few years and then you turn on income and you take out $900,000 over a period of 30 years, there probably won't be anything in there. Just because it's a huge ROI, that's a huge return. And annuities are not for growth. Don't get me wrong, they do grow. But if you're looking for straight growth, then mutual funds, if you want to be in mutual funds or stocks or things like that, typically when you're growth minded, you go into things like that and you're willing to accept the risk of those type of securities. But as far as annuities, if you're looking for income, if your purpose for that money is income, then it could be the perfect investment vehicle for you. And then of course, if you want to leave it to your beneficiaries, there are annuities out there that will continue to pay them income. Okay, it's not common, but they are out there. Charitable giving. So charitable giving as part of an estate plan, that's what people do. So what they'll do is they'll set up a charitable gift annuity or even some type of trust that will allow them to take income from this annuity, but also distribute what is left to a charity. Okay, so there are certain ways to set that up, and you got to talk to an estate planning attorney to do that. But I can talk to them. We could both kind of work together and see exactly what you want. When you are setting up annuities, it's important to talk to a licensed professional such as myself. It's easy to book a call. just go to the link below and you'll be able to book it with me, and happy to go over the numbers with you. We can play with them together and see exactly what an annuity would do for you. It really just depends on what you're looking for. If you're looking for just straight growth, something higher than a bank account, we've got those. And if you want income guarantees, we've got those too. Happy to show you everything that's available. And I like to show you the best ones and let you decide. And really, it's really that simple. So thanks for watching the video. Look forward to seeing you in the next one.